Daytrading Psychology Traps FOMO MasterClass. If you are taking trades out of FOMO, if you're thinking you're going to miss this trade, if you're thinking, dang, I should have gotten in, maybe I could have gotten in, maybe I should still get in, you're playing right into their hands. That's exactly what they want you to think, and you're going off of what you see rather than what's really going on. I want you to see the bank's true agenda. If you want to know whether you should go long or whether you should go short, then we got to go a whole lot deeper. Because the moment you start to feel like you should have been in a trade, you could have been in a trade, you could have made all that money, that's how beginners think, okay? That's how the amateurs think, that's how the newbies think. You're not going to be one of them after this Day Trading Psychology FOMO Masterclass. After today, after this Day Trading Psychology FOMO Masterclass, you're not going to feel like a newbie. You're not going to feel like second-guessing your trades, your entries. You won't be playing right into their hands anymore. Newbies go off of quick movements of the candles. Amateurs look at the candlestick patterns alone, not the whole overall market context. You're not going to be one of them. You're not going to play right into their hands anymore. You're not going to think the way they think. You're not going to think the way the banks want you to think. And you're going to start to make money the way they don't want you to make money. I've been in the field of psychology for over a decade, okay? I've worked with 5,107 people one-on-one to date. And recently, I've started working with day traders. Guess what? It's the same daggone pattern over and over regardless of the field that I'm in. People are being misled, deceived, and all that because they don't see the market maker's agenda. They're acting like the rest of the crowd. They're acting like the herd mentality, and they're playing right into their hands. Some of those candlestick patterns don't mean what you think they mean. And depending on where it is in the overall context, it can mean the opposite of what you've been told. I'm going to show you the psychology behind those candlesticks. I'm going to show you what they mean and what you've been told, and I'm going to show you when they mean something totally different. In this Day Trading Psychology FOMO Masterclass, I want to show you why this game is rigged. It is set up to make you feel FOMO. They have expert psychologists telling them what the candlesticks should look like and how fast they should move. I'm going to show you why the candlestick movement is a trap to get amateurs to play right into their hands. And I guarantee, after this class, you will not see it the same way again. Okay, so you have obviously seen, because who hasn't seen all of these different books or all of these different courses on candlesticks? The Trading Bible, the patterns, book, like 4 or 5 plus 50 books in one, I guess. Now, I'm not saying that these books aren't legit. I'm not saying that these books don't have, good information on them. All I'm saying is we are constantly inundated by this kind of stuff. And some of these are repeats. But you can see how many books there are on the subject, and you can see how many pages there are at the bottom on the subject. The reason I'm pointing this out is because this is the herd mentality. This is what everybody knows. This is what 90% of people know, and 90% of people are still failing. Okay, so I'm going to show you the candlestick patterns that I'm sure everybody and their grandma has seen. But what I'm sure of is that what you've been told in a way that is not correct. Okay, let me show you these candles here that I'm sure everybody and their grandma has seen at this point. Okay, so this candle right here, people are going to think, yeah, that's bullish because it's strong, it's full, it's got almost no wick at the top up here, it's got almost no wick at the bottom down here. Solid. Obviously a lot of sellers pushing up. Now in that segment of time, yes. But in the overall context, maybe not. Some people will say this candle right here means indecision because it went up, it went down, or down and then up, and it closed in the middle here. Some people say this candle right here, well, sure, there was a lot of selling pressure, and then the buyers drove it back up to the top. In that segment of time, however long that duration is, depending on the type of aggregation you have on your chart, could be a minute chart, 2-minute chart, 3-minute chart, could be a 10-minute, 5-minute, could be a 30-minute, an hour chart, a half-hour, it doesn't matter. Okay, the point is, this alone does not mean what they want you to think. And we're about to get to why they keep indoctrinating us and showing us all these kind of things, because they want us to think this, because it changes what they're able to do, what they're able to make us think. Again, we're not going to be thinking like that at the end of this course. This candle right here, someone's going to get you to think, oh, look, there was some buying pressure, but then it got driven back down and now it closed on its low. True, in that segment of time. They're going to make you think that one's indecision. They're going to make you think that one is super strong because just full body closing at its low. Great, but it doesn't mean anything, okay? That's exactly what they want you to think. Here, let me show you exactly why. Okay, so here's an example, case in point. So they want you to think price is going way down, and there's a huge wick showing all the buying pressure starting to come right back up to this point, and it's going to go right back up. Look at this big long wick at the bottom of this red candle. They want you to think buying pressure is going up. Of course they want you to think that. Why do they want you to think that? Because now if you see all these buyers coming back up, that they've manipulated the prices. They've manipulated the candlestick and how it looks. Then all of a sudden, there are more people willing to buy. More people willing to buy what? What they need to offload and sell. Why? Because boom, comes right back down and takes this level out right below that level. Look at that. That's not by accident. Now, some people will teach, but Aaron, look, there's a big long leg down here. It goes down. There's a retrace, and then after this retrace, it's going to come back down. Yeah, that does happen sometimes. And then when people see this big green candle, they're like, oh, look, 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 look. Big green candle, you know what that means? It means it's bullish. Because that's exactly what they want you to think. Especially after a second leg, it even looks better for them in their portfolio. Why? You see a big long candle, most people are thinking, oh yeah, this thing is going all the way back to the 21. This thing is going all the way back. I can make at least that much profit all the way back. That's exactly what they want you to think. After a big long green candle, they want you to think it's going up, especially if they don't want it to go up. Because if people think it's going up, they're going to buy more shares. From whom? From the banks that are trying to offload and sell more shares. So, of course, they want you to think it's going up. They want the newbie to think it's going up. They want the stupid to think it's going up. They want the amateur to think it's going up. Why? Because they don't want to go back up. They're going to keep going back down. And you can see how it clears out this level right here easily. Easily. So the same thing could be said if we saw a big red candle and they had no intention of taking it down lower. Why would they want to sell more why would they want to sell more candles? Why would they want to sell more shares? Because they need to make you think that you should sell more shares to them so they can buy more of them and then take the price right back up in the desired direction in the first place. Okay, so basically what I'm trying to say is these candles don't mean anything. Okay, the only time they mean something is if we've already had a liquidity sweep. After that liquidity sweep, then all of a sudden they mean something totally different. So why am I bringing this up? Because we're going to get to the next reason, but one of the biggest reasons that people have FOMO in the first place is because they think they see something that doesn't mean what they think they saw. And when they think they see something that doesn't mean what they think they saw, they end up reacting to something they should have never reacted to. Okay? So let's get into the next piece. Okay, so here's the next piece we want to look at. Now this happens all the time, every day. But people aren't noticing it because they're too busy trying to notice the bearish candles, the bullish candles, the hammers, the inverted hammers. They're trying to notice the inside bar. They're trying to notice the engulfing bar. We're not getting into that, okay? There is stuff far more important than that. Okay, so here, let me show you something. This is so common. I don't know why people aren't calling this out more often. So the only way the big institutions can sell more shares is if there's a buyer there to buy more shares. So they're going to drive the price up. And where are they going to drive it to? To a place that they believe statistically more people are going to buy those shares. Okay? And when they need to sell more shares, the only way they can sell more shares is if they have someone to buy up those shares. Otherwise, they're going to be left holding the bag just like you and I do sometimes. Okay? Just like the amateurs do sometimes. Just like the newbies do sometimes. Just like the uneducated do sometimes. The only way they can keep selling more shares is if they have someone that's going to buy those shares. You can't sell to somebody who's not there to buy. So, where would they most likely do that? Check this out. Let's say the price is oscillating down this direction. Okay? So if the price goes below this, it is such a common strategy. When the price goes below, people think, oh, well, let me draw this even better so you get the idea. People are like, when there are lower lows, it means the price is going down. Well, only if they want it to go down. Because if there's a liquidity sweep, they want you to think it's going down. So you will keep buying or selling and going down because you're selling right into their hands, so they have more shares to buy and take it the direction they wanted to go, up all along. So usually when it passes this point right here, the doctrine is, candlestick doctrine is, if it passes this low right here, that's exactly when you get in. When it passes this low right here, that's exactly when you get in. When you pass this low right here, that's exactly when you get in. When it passes this low right here, that's exactly what you get in, unless you know better. Because it doesn't mean that. In fact, they do that at different periods and different numbers of times because they don't want people to read the writing on the wall. They don't want people to know what they're doing. They're not trying to tip their hats. But if you connect the liquidity sweeps and you connect the candlestick patterns, you can't be fooled. You can't be fooled. So again, we're going to get to the other reason here soon, but one of the biggest reasons that people fall for this kind of stuff is because we think we see something and we think it's going a certain way based on what we saw, and we're playing right into their hands, making the decision they wanted us to make the entire time. So call it sleight of hand, call it the art of deception, whatever you want to call it, but that's what they're doing. Okay? So as soon as it passes this level right here, as soon as it passes that low, they know they're going to have more sellers. More people are going to sell as soon as it goes down past that level. They know that. And guess what? More people are going to sell. And if that's the price point they want to sell to, if they don't choose to go any lower, if they now choose to take more profits, because more people think it's going to sell after it goes below that level, they're selling to whom? They're selling to the people who need more shares in order to take the price point the very direction they want to take it. Like that. So here's what we're looking for, whether it's a sale or whether it's a buy. So, let me go the other direction just to make my point. We got higher highs and we got lower lows. Here's a low, here's a low, here's a low, and here would be a low. Okay, here's a high because it's higher than the peak at this point, because it's higher than the peak at this point, because it's higher than the peak at this point. Okay, and so forth and so forth. Now, same thing. Follow along here because you're not going to be a newbie anymore after this. If the price crosses this high, people are going to think, yes, it broke that high, it's going to keep going. If the price crosses this high, people are going to think, yes, it's going to keep going. That's what most of the books teach. That's what most companies teach. That's what most courses teach. Except it's not true. So the reason they want you to think that is because as soon as it crosses this high, and they know the majority consensus in what they think, they're going to say, well, good. You're buying exactly what we want to sell. And now we have enough people to buy it, so we can do exactly what we wanted the entire time. What's that? We can, as soon as you think it's going up, thank you very much, you bought exactly what we're trying to offload, and we'll take it down the other direction. That's why people get caught. So let me show you a few examples of this. Let me show you how I can spot it, because the more often this happens, the more chances they have to sell off their shares to newbies, amateurs, people that don't see the writing on the wall. When they have more of a chance to sell it to these people, it gives more insight that it's actually going the other way. Now I'm bringing this up because now that you're seeing this, you know it's not going that way forever. You know it's not going to go that direction just based on those candlestick patterns alone. Because when you know what to look for next, you can't be fooled. Okay, check this out. I'll show you right now. Okay, take a look at this. So we went over how this big green bar here. In traditional methods, in traditional teaching, people are going to say, oh yeah, that means the price is going up. It's really bullish. Look how big and thick that bar is. Look at the body. There's hardly any wick on top. Good. for the institutions, right? The institutions know that people think that. They know there are hundreds of books put out on that. They know that's what the courses are teaching, to look at the price action. So they're going to use that to their advantage, because they need people that think it's going up. They need people to buy because they need to offload the shares that they're selling. And sure enough, it goes up. But here's where it gets interesting, because now this isn't just 101 anymore. This is 501, because now they're not just taking out the newbies who don't understand that. Now they're trying to win on the upside and on the downside, both. Check out this price action. So we went over how we got a strong green bar here, and most of the newbies think, oh, that's bullish, I'm going to go up. Right when they go up, that's great, because people think they're going to buy, and they buy what the big institutions are trying to sell, and they sell more of it. Look, bam, goes all the way down. Wonderful. But now's the part where they buy on the downside and the upside, because they need more shares to go the direction they want to go. So check this out. Now we got another bullish bar going up, but just a little bit lower, and take out those that think it's going to go down, because those that think it's going to go down, then all of a sudden they're selling to the institutions who want to take it back up, but they're not done yet. Look, people think, oh, they wicked below. Dang it, they took out the stops right where they know they're going to be, so they make them think it's going to go lower, so more and more people sell off their shares to the institutions who want to buy them up. And they take it back up to the 21. What? Just simply to wick back up and to buy more shares into those that are selling their shares. But it's like, how long are they going to keep flip-flopping back and forth, up, down, up, down, up, down, wicking up higher than the wick before, wicking down lower than the wick before? How long are they going to do that? This is where we have to look at the bigger picture. We have to look at the bigger liquidity picture and see what happens in that direction. That's going to tell us how far down they're going to go, and where the big moves are sitting, where the big whales are sitting. Otherwise, this price action doesn't mean anything. A big green bar, a big red bar, it doesn't mean anything unless we know how long they're going to play this manipulation game. Where is the price level that they're trying to get to? Look at this. You see this right here? Let's see if I can zoom. Look at that. This price, and look how steep this pivot is. Look how steep this is where the price action reverses. That's what we want. That's what we want. So go on over and let's draw a line from that very point on over. And we're going to watch them play this. It's probably going to go down to that level. It's probably going to manipulate all the way down to that level. Because look, it started right here. It started up here. They probably manipulated up here until, bam, they're going all the way down. I'll bet that's where they're going. So check this out. Let's see how this manipulation plays out. If it doesn't go that far, fine. I won't be offended. So check it out. Okay, look. Oh, big red candle all the way down. And guess what? Didn't reach it yet. So what are they going to do? Whipsaw back and forth to make people think they're going up? So when they're going up, more and more people are buying what they're trying to offload and sell, all the way to come back down here and sell more and more to more and more people who think they're going to sell. So they're going to sell their shares to them who want to buy. And they're just garnishing more and more shares on the upside and on the downside both. This is not 101, okay? But when you start to understand this stuff, you have less and less FOMO because of these big bars. When you start to understand this stuff, you don't get carried away. Let me see here. When you start to understand this stuff, these bars don't mean anything. If I see this bar take off and it's a huge solid bar, let the daggone thing go, because I don't know the whole story. This means nothing without knowing the whole story of what they really want us to do. Doesn't mean anything. So, but now that I see where they're going, let's just let this play out. When is it going to wick below? I'm not getting tempted by these two solid green bars. No way. Why? Because they're just hoping I buy up, and I buy up what they're trying to sell off to me so they can take it lower. I'm waiting until it hits that level. Then I will look for those candlestick patterns. Then I will see, now the bullish actually means something. The bearish actually means something. Let's watch. Look. I'm not jumping at that. I am not jumping at that. No way, because why? They're looking to buy up more shares, so people think, yep, Aaron, you missed it. It's not going to touch that level on purpose. So they get more and more people to buy what they want to offload. They want to hit that level. And if they can hit off that level by selling at a higher price point, well, that's more profit for them. Go on. Let's see. Are you going to come down? You're going to make me look stupid that I don't know what I'm talking about. Look at that. Look at that candle right there. Bam. See how it wicked through? See that rejection? Now that is the hammer candle that means something. That is the hammer candle we should be paying attention to. That is when we start to see, let's see here, this right here. Look at that green hammer candle right there. You can't get much more textbook than that. That one right there. See this green candle? Except in this case, it's red. That's what we want to see. That is exactly what we want to see. Now, we're cooking with gas. Now these candles actually mean something. We're taking it somewhere, baby. Where do I think it's going? Well, I'll tell you right now. It's going at least to this level. Do I think it's going all the way up here? Man, with whipsawing back and forth here, taking buyers and sellers out, it's going somewhere. It's going somewhere. So, you can make a living just off this trade right here. You get in right here as soon as that one closes, and you take it all the way up to here. Trying to see what my profit would be from about here, this level here, all the way up. Yeah, off one micro contract, just one, you're looking at $104 because you see this box right here. Look at the very last line. It tells you how many points it's going up. That's a lot of money right there. So one contract, you're going to make $204. That's dinner money right there. That's dinner money. And you start accumulating, and you're doing like 2, 3, 4, 5 contracts. You're talking about $1,000, one trade. You're done before lunch. That is exactly how it works, folks. We're not playing these newbie games anymore. We're not playing these FOMO games anymore. We're not playing these games where these big candles are going to trick us into jumping in when we don't even know the whole context. Because that big candle doesn't mean anything in isolation by itself without the full context of the picture that, hey, it's jumping off this level. Hey, it's jumping off this level. Okay, so I'll bet it doesn't even touch this level for the rest of the day. I'll bet it doesn't. Check this out. It wicked down. Look how strong that rejection was. It started to come down. Then it starts to push back up. Now this hammer candle means something. Oh, look at that. It might wick below this like one little tick or one little penny. Like that. It might go down to there and then it'll shoot up. But watch. I would totally put my stop like right here and jump in. I totally would. What's it going to do? Look at that. Look at that jump. Went above that level. Who knows? It might go all the way up to here. That's nice. That's nice. I would have been out by here anyway. I don't hold over. With my particular strategy, I don't hold overnight. But you could. You could. Look at that strength, man. Look at that strength. Bam, all the way up there. It's going to make another leg probably at least of this size. So up here, yeah. Regardless, it easily passed this level right here. That's how you do it, folks. That is exactly how you do it. So, what I want to point out now. We stop second guessing when we see a different perspective. We won't be chasing the trades. We won't be having the FOMO, because the FOMO happens when we have the wrong expectation of what's going to happen because of that candle anyway. But when we see why it's supposed to be there, when we see what it really means, we're not going to be falling for it like the newbies. We're not going to be jumping at it and getting all excited about it like the amateurs. We see what it's supposed to be and we take it for what it is. If this was helpful for you, subscribe down below. Go ahead and hit that button. I'll show you a whole lot more things that the pros see that the amateurs are not picking up in the psychology. I tell you, when your perspective changes, you don't feel the FOMO anymore. You know what that candle means. You know it's the newbies jumping at it because they don't see the perspective. You might get one of those solid candles running right into that target profit. You might get it. But if you know where it is, you're not going to fall for it anymore. Okay. So that's that for today. Hit that subscribe button, and I'm going to show you how to overcome a whole lot more than just the FOMO. All right. Talk to you next time.